So, have you ever wondered how someone who isn't a US person can actually open a US bank account? Today, we're going to dig into that exact system. We'll look at how it works, and more importantly, why the IRS keeps such a close eye on the money in those accounts, even when it has no plans to tax it. This is a fascinating look at the real machinery of global finance. So, here's how we're going to break it all down. First, we'll look at the special key that makes this all possible, a unique tax ID. Then we'll see how that key unlocks a door that seems, well, impossible to open. After that, we'll follow the money trail right to the IRS. And finally, we'll zoom out and piece together the bigger, global reason this whole system even exists. All right, let's start with the key itself, the individual taxpayer identification number, or as it's known, the ITIN. Understanding what this thing is, and maybe more importantly, what it isn't, is absolutely crucial for everything else we're going to talk about.
Okay, so what is an ITIN? Well, it's a 9-digit number, and you can always spot one because it starts with the number 9. The IRS is super clear about its purpose. It's a tool for federal tax processing. That's it. It was created way back in 1996 to make sure anybody who owed US taxes could file and pay, even if they couldn't get a social security number. Now, at a glance, an ITIN might look just like a social security number, but let me tell you, they are worlds apart. An SSN is all about working and getting social security benefits. An ITIN, on the other hand, is a single-purpose tool. Its only job is tax administration. And getting that distinction is critical because it really sets the boundaries for what someone with an ITIN can and can't do. So just to be crystal clear, let's bust a few myths. Having an ITIN does not give you the right to work in the US. It does not make you eligible for Social Security, and it has absolutely zero impact on your immigration status. The IRS made it for one reason and one reason only: to process tax returns. Okay, so we've got this special tax ID. How in the world does it become the key to a US bank account? Well, this is where it gets really interesting, because when you first look at it, it seems like an impossible loop. Think about it for a second. To open an interest-bearing bank account, the bank needs a taxpayer ID number. Makes sense. But to get an ITIN for that reason, the IRS says you need to prove you have a reason for one. Like, an interest-bearing account. You see the problem? It's a classic catch-22. And this isn't just some theoretical brain teaser, it's a real-world headache. The system's own rules create this barrier, what this quote calls a logistical conundrum that basically seems designed to lock people out. So, what's the workaround? Well, the IRS created a specific procedural bypass for this, and it's called Exception 1. Here's how it works. You go to a US bank, and they give you an official letter that says you've opened an account that's subject to IRS reporting. That letter itself is the proof you need. You attach it to your ITIN application, Form W-7, send it to the IRS, and just like that, you've broken the loop. Okay, so the account's open, the ITIN's been issued. Now we get to the real heart of the matter. How does the IRS treat the interest that money earns? And how does it keep tabs on it? This is the multi-billion-dollar question, isn't it? If a foreign individual puts money into a US bank and earns interest, do they owe US taxes on that income? The answer is what makes this whole system so incredibly unique. The answer, for the most part, is no. The interest is not taxed, but, and this is a really big but, it is reportable. Let that sink in for a second. The IRS doesn't want to tax the money, but it absolutely insists on knowing about it if it's over $10. Not taxed, but tracked. And this chart here just lays it all out perfectly. You've got two completely separate information highways. A US person gives the bank a Form W-9, and the interest gets reported on a Form 1099 INT. But a non-resident alien, totally different path. They provide a Form W-8 BEN, and their interest gets reported on a Form 1042-S.
So let's follow that non-resident data trail. It starts with the Form W-8B, which is basically the person officially declaring their foreign status. Then, the bank reports any interest it pays to the IRS on Form 1042-S. And here's a little detail that tells you everything. The form's full title has the words "subject to withholding," even though the withholding rate for this interest is 0. That tells you the form's real job isn't collecting tax, it's collecting information. This all leads to one massive question. Why? Why would you build this whole elaborate system just to track income that you don't even plan on taxing? Well, the answer lies in this huge global push for financial transparency. To really get it, you have to know about a law called FATCA. Basically, FATCA is the US telling banks all over the world that they have to report information about their American clients back to the IRS. The US demands transparency from other countries. So here is the incredible balancing act. On one hand, the US wants to attract foreign money, and a great way to do that is to make bank interest tax-free. That brings in a flood of foreign capital. But on the other hand, the US wants to be seen as the world leader in tax transparency, which means it has to track that same money to create an information trail, a trail it can share with other countries. And that leaves us with this final, kind of provocative thought. You know, when a country doesn't tax a certain type of income to attract foreign money, we usually call that a tax haven. But when that same country builds a powerful system to meticulously track and report on that same income, what do you call it then? It's a paradox, and it sits right at the very heart of the modern global financial system.